Okay, just take note that this webinar is purely for educational purposes. It does not take into account specific investment objectives, financial situation, or particular needs of any particular person. All right, so moving along, I just want to cover a bit of theory before I start with the live markets. I think every week I show you these slides, right? And if you look at the recorded webinars, I always mention that I use price action to try to understand what the market is trying to do, regardless of time frame. All right, price action works regardless of time frame, and the whole idea is to see whether the market is trending up, down, or moving sideways. Today, I want to cover something also regarding price action, but basically how to plan your entries. Okay, how to take your trades, and what kind of patterns to look out for. So this is a little cheat sheet that I have that I've been using for the past 7-8 years. Of course, in the markets, it does not look, I mean, the patterns do not look as clean cut as this. But you get the drift, all right? So it's very important to understand what the market is trying to do when you see such patterns. In fact, sometimes it is as clean cut, okay, sometimes. But it's very important to know what the market is trying to do when you look at such price action. So for those of you who missed last week's webinar, go have a listen to it, especially the first 10-15 minutes, because I covered the three different types of market correction, especially in the trend, the three different types of correction and how to trade it. So for today, I'm want to focus a bit more on support and resistance, how a certain level changes its role, okay, role reversal, and basically how to take such trades. So if you look at the slide right here, on the left hand side is basically how markets will look like when it's going on uptrend. Okay, when it's going on uptrend. So for example, if you see this particular top one here, you notice that, let me change it to my pen. Okay, notice that the market made a very cheeky lower low. So normally in price action, lower lows, actually it might be a start of a downtrend, isn't it? But after that, it made a new higher high and then another higher low, and then it continues upwards. Okay, now many of times the support will be somewhere here. Okay, so you got to be alert enough. So sometimes, especially during the market opens like 3-4 p.m. Singapore time, which is the UK Open, or maybe 9-10 p.m. Singapore time, which is the US Open, sometimes you actually see the market make a slight lower low for it to just turn upwards like that. And I mean, many a times, especially when I just started trading, or maybe some of you might face this problem as well. Many times when it makes a lower low, you would think that, oh, the support is not holding, it's going to break downwards, and then the thing just turn upwards. What's more frustrating is you already have a long position here, the market make a lower low, take your stop out, and then the thing starts shooting upwards. And a lot of times you feel so frustrated. It is really frustrating. Okay, and some traders will start blaming the broker, and things like that. But it does happen. Okay, it does happen. And it is sometimes it's basically the market's reaction to it. Sometimes when the new fresh funds are coming in, especially in the open of a London market, for example, it just pushes the market in one direction. It might not be a sustainable direction. It might be just a short-term false break, and then it continue in the overall scheme of things. So you got to be mindful. So this is just one of the patterns to look out for. So if you see that the overall trend is up and you're looking to buy and looking at support, even if you get stopped out the first time around here, okay, do not hesitate or do not have the fear of pulling the trigger the second time when you see the level breaking upwards, because this is called a false breakout, okay, which I'll cover a bit later as well in the live market. So if you see a level here, okay, if you see that the market is always marking around here, support, so you know that this support level, right? And then suddenly it breaks downwards. So maybe some of you might say that, okay, I want to take a short because it's broken downwards, right? So you take a short somewhere here. But the thing is that when you take short, suddenly the market just bounce back up. Okay, and you get stopped out and then it starts going up from here. Now you have to be alert enough to know that this level here is a false breakout. Okay, and it happens many times, especially if you look at two different time frames, right? So what happens that if you see that the The market is marking around the support, and then this is a candlestick. Excuse my drawing, but this is a candlestick, and then there's a long shadow here, and then they have other candles here, and things like that. Okay, so normally in the high term time frame, sometimes you see the candlestick is doing like that. Okay, but in the lower time frame is this. So this can be like a 15-minute time frame, and this can be like a 4-hour time frame, for example. Okay, but you need to be alert enough when you see a high term time frame, especially when the timing is close to a candle close, and you see a long shadow at support, and you see a 15-minute doing something like that. This is called a false breakout. Okay, but essentially it's just playing around the same level here, which acted as support, became resistance, and then back to support. Okay, happens in the market many times. You just need to know how to spot it. All right, so I just want to focus more on this. So same thing, this support, exactly the same for resistance. You see, this one here. So you think that the market is going up, right? It make a higher high, only for it to make subsequent lower low, and then make a lower high, and then starts coming down from here. So same thing, either on either a bullish scenario or bearish scenario, same concept. Okay, so just these two concepts I wanted to focus on a bit today, just to make sure you understand what false breakout is. Yeah, especially if you see the two different time frames. Okay, it's good to use whenever there's a breakout. It's always good to use two different time frames because you want to see how the candle is looking on the higher time frame and things like that. All right, any questions? Okay, cool. Let me just move on to the live markets right now. Okay, let's go to start the S&P. Okay, so if you look at the S&P 500, it's still very much bullish, quite similar to the analysis 2 weeks ago. You can see that the market is making higher high, low, higher high, low, and right now, okay, 2400 is a psychological resistance. I don't think it will break that easily. It has been touched one time in early March and respected so far. Right now, the market is quite clueless in terms of especially the indices market. I mean, last week, if you see the webinar 2 weeks ago, I bring out the VIX, the volatility index. In fact, let me bring it up again. Okay, just a quick one. The VIX index. Okay, so last 2 weeks ago, I bring it out, and I'm going to bring it out again just to show you that at the VIX, okay, VIX measures the market volatility, yeah, okay, using the options market. But anyway, it basically measures the sentiment, not sentiment, more the volatility of the market. And if you look at where we are right now, we are really in the area whereby, let me just try to change the weekly chart. Okay, let me just zoom out a bit. Sorry, I need to zoom out to 2011 maximum. But you get my drift, all right? And you can see that we are really in the low area. Okay, you see, if you look at 2016, it spiked up many times, but 2017, who would have known after Donald Trump took over, the market actually went quiet. Interesting, eh? So you can see this was 2016 November, this was the US election that caused it to spike all the way to 22, and right now it's just really low. Okay, interesting. So some of you might want to take a look at the VIX. Just take note, like I mentioned 2 weeks ago, the VIX that IG offers, the underlying is based on the futures. Okay, it's different from the VIX that you see on your television, or if you Google VIX and the Yahoo or Google search engine shows the VIX. Okay, the price is different. Okay, the levels, the price are different. The trend is the same, but the price is different because what you see on TV or on Yahoo or Google is basically just index. It's a non-tradable index. What IG offers is based on the futures, which is tradable. But it's the same concept. It's the same concept, even though the price is different. So that's the VIX for you. So back to the S&P. So it explains why it's rather sideways right now in terms of what the market is doing. If you look at the daily chart, you can see that okay, it's made a lower high. And what I'm thinking is consolidating is in a so-called triangle formation. So if you see this line here, support, high chance that we are coming back to the support. The support is 12360 or so. Okay, there's this trend line which I drew. Let me zoom out a bit. There's this trend line which I drew as well that connects the highs from April last year all the way to this year, and it might, if it breaks 2360, it might come back to this trend line support. Depends on when we do it, but around the 2340, 2360. So I expect a bit more consolidation, even though overall it's still bullish. Okay, I don't think even if you're bullish, there's not much. The levels are not that attractive to get in on. Okay, because it's just in the middle of nowhere right now. Okay, it's in the middle of support and resistance. So it might consolidate back to the support around the 2350, 2360 area. Okay, but 240 definitely strongest resistance there. If you look at the 4-hour chart, okay, you can have a bigger picture. So this is the lower high from the daily. It might come down because the shorter term support is around 2370. If it breaks, then the 2360 very likely. Okay, but basically if you're trading intraday swing type of trade on S&P, it's basically just trading range bound conditions, playing with support and resistance. Right now where we are not the strongest support resistance, I wouldn't recommend doing much. Okay, so the support is either 2370, 2360. If not, you're looking it back to about 2385 or so. Right now where we are, I'm not that keen to touch it. Okay, so there's the S&P for you. Going to the DAX. Okay, if you have any questions, feel free to just jump in. Yeah. Okay, looking at the DAX daily chart. Okay, still very bullish. Okay, still very bullish. Key resistance level is around the 12100. 12100. Interestingly, if you look at the MACD, if you compare this high, let me get my drawing tool. If you compare this high, and this high. Okay, so if you see this high is actually a high. Okay, this to this is a high. But if you compare these swings, right? Okay, it's a slight lower high. So this is called a bearish divergence. Bearish divergence means that the uptrend, okay, maybe the bulls are getting a bit tired because the momentum is waning. Okay, the momentum is waning. Okay, not to say that it will totally reverse immediately, but it's a sign that the momentum on upside is waning. So if you look, let me go back there. So if you look at this swing here, there's a nice bearish pink candle at the resistance level, which goes to show that, you know, a lot of bearish pressures here, and the bulls couldn't push it up. I think it's an interesting time for the DAX. Okay, pay close attention to it because we are consolidating into a tighter and tighter apex of this little triangle. So something's got to give. I'm more inclined to see it come to the downside and maybe back to support level around the 11,900, somewhere here. So I'm more inclined for it to drop back to this level here, somewhere here. Okay, but for it, the shorter term support need to break, the 12,000 level need to break. Okay, let's go to lower term time frame and have a closer look. So remember I told you in the beginning about the false breakout? Now, pay attention and keep in mind this little candle here in the daily chart. Yeah. If I show you the 4-hour chart, you see, you understand where I'm coming from? Okay, so this is considered a false breakout to me because this level here, okay, this 12,100 level is a key resistance, isn't it? Market tried to break above it, and if you look plainly at the 4-hour chart, it seems like a legit breakout, right? I mean, ignoring all these red candles, of course, on hindsight, it's easy to say, but I just want you to pay attention on this green candle here. Okay, it seems like a legitimate breakout to the upside, isn't it? Yeah. Only thing is that when the market U-turn, okay, so when the first sign of false breakout is that the key bullish candle, okay, this can consider like a bullish engulfing candle. So the first sign of a false breakout is that this whole bullish candle that broke the previous resistance is being reversed by the red candles. So for this case, it took 2 red candles. So the first thing you see, this candle, right? This I would say 80% of this big green candle, okay, has broken out the previous resistance, key resistance around 12100. However, the next red candle that it formed, okay, it covered back most of it, and then another red candle that it formed closed below this resistance level. Okay, so this whole bullish momentum has been reversed by this 2 red candle, and this red candle is closed below the key resistance level. So this signifies that the bearish pressure is pushing the bulls down and the bears are winning. Okay, and if, I'm not sure when the daily candle closes for this case, if you look at the daily candle, okay, this is not a very bullish candle, isn't it? Because look at this pink candle, bearish pink candle. not very bullish at all. So this, safe to say, is quite a decent false breakout. And the way to trade false breakout is that if a candle closes back below the level, the key level of, for this case, 12100, if it goes back to the key level again, go opposite of the breakout. Okay, that means go with the false breakout. And then so most probably you take a short here, and maybe your first target might be the previous support. Okay, for this case, because if you take a short here, you're actually counter trend because the overall trend is still up, yeah. So you got to be very, very quick in terms of taking profit. Okay, risk to reward depends. It depends on the so your stop loss most probably will be above here. Okay, and make sure there's enough meat. So most probably you'll be probably targeting the next level of support around 1200 or so. Okay, so if you're taking a short here, this might be, you still might be in a trade. Okay, because still moving sideways around this small region here. Okay, but that's the idea of a false breakout. So this is one clear example. So again, just draw a line. So this just show you how to trade a false breakout. So let's say this is the resistance. Market going up, nice and bullish, and then it finally broke out. Okay, so the first thing you want to look out for is whether this breakout candle is actually reversed, because if the market goes back to, let's say the candle reverses this entire breakout level, right? So that's number one. Number two, if the candle closes back below this key level here, that's number two. Okay, because it does that, that means this breakout is not valid. Okay, and also number three, if you refer to heightened time frame, you actually see a long shadow type of formation candle. And so if it goes down, so the idea here, instead of trying to trade a breakout, you are trading the false breakout. And then when it goes back to resistance, you might want to take a short here, stop loss above the previous high, and just take profit somewhere here. Okay, so that is the idea. Now, if this happens in a downtrend or a heightened time frame, that would be very nice. I repeat, if this happened in a downtrend of a heightened time frame, that would be brilliant. So for example, this is the 15-minute chart, but your 4-hour daily chart is actually going down a downtrend. Okay, if this happens together, perfect. But for this DAX, it's a bit different because the lower term time frame, yes, it's showing a false breakout, but your heightened time frame, it looks very bullish. Okay, so if you are trading a false breakout, which means you are trading on the short side, you are actually counter trend. So be very careful. Okay, so that's the DAX for you. Any questions? Okay, so that's the DAX. Let's see what's next. Let's go to Japan. Nikkei 225 doing nothing since the past 2 weeks. Okay, past 2 weeks I was talking about how we're trading along this range. I haven't drew this line from 2 weeks ago, and still doing the same. Okay, for those of you who are alert enough from the webinar, I did mention this 19,600 is a key resistance area. So 2 weeks ago, 7 March was somewhere here. Okay, so if it pops up here, this level here, you would have might taken a short stop loss above the previous high around here. Okay, so your stop loss is around this level, above the previous shadow, above this shadow. Close to getting stopped, I won't deny that, but then you should be, if you survive that little spike up, you should be in profit right now. Okay, but basically it's range bound. So when it's range bound, you are simply trading the support and resistance areas. So this level here is quite key resistance. Okay, but if you're trading support resistance, especially off a heightened time frame, I mentioned this many times, but I'm going to mention it again. Number one, if you're trading off a heightened time frame, support and resistance is a range, it's not a specific level. Okay, it's a range, it's not a specific level. So if you've taken this short based on the resistance, the key resistance, your stop loss should be at least the previous wick high. Wick as in W-I-C-K, yeah? Or the previous candle shadow high, which is here. So maybe your stop loss might be around 19,740 or so. Okay, so just take note of that. So right now it's coming down. I foresee coming back to this trend line, but we are getting in a tighter and tighter spot, so something's got to give. If you look at the 4-hour chart, nothing much to look here, because yep, just very, I think the daily chart is a nicer reference chart. Okay, so for the Nikkei, I'll be looking at the daily chart. Yep, and you can actually extend this line. Let me see. Okay, so if you are looking for a trend, then just be a bit patient. Let it break. If it breaks the trend line, high chance it's coming back to support around 19,000. Okay, but it's moving on the sideways. It's moving sideways for the past few weeks. No difference. Okay, let's go to Hang Seng. Okay, Hang Seng, very bullish. I'm not sure if you watched last week's webinar 2 weeks ago. This was where we were, 7th of March. Okay, I did mention that you might want to look at this support level around the 23,500 to take a long position because there's good support there. The trend was up. I think, was it you, Crystal? Because I was talking about corrective structures, right? And you did mention that Hang Seng is showing the one of the corrective structures that I talked about. So I was talking about if the market's uptrend, one of the corrective structure is that when the short-term trend is down, isn't it? So this is, I think, Crystal, you mentioned that Hang Seng was doing exactly just this. Okay, and it came back to support and then it went up from there. Okay, so this was a really nice support level in the uptrend, and it continued. I didn't expect it to be so bullish, but then it broke the previous high and then it just continued. Okay, now how would you have taken the trade here? Let me just delete the lines. Okay, how you would have taken the trade at this level here. Okay, so that's where you zoom into the, let's go to 1 hour chart. Okay, so you know that this whole level here is support on the heightened time frame and you want to take a long. Okay, the first sign you see here is that when it's consolidating in this support and resistance area, okay, when it broke out this area, see here? Okay, so you see this candle here? So when it broke out this area, right, you can actually safely say that, okay, the market might be moving up. You might take a breakout long here, which is a valid trade, but the thing came down and stopped you up. Okay, because you take a long here, maybe your stop is somewhere below here, came down, stopped you up. Doesn't matter. Okay, what it did after that was that it actually broke the support level. See this level here? It broke support level. See that? But what happened is that even though it broke it for a couple hours, it actually bounced back up. It actually bounced back up. Now, what's this called? I just mentioned it a couple minutes ago. So basically, a support was a key support. It was on a little short-term downtrend. You still know that this whole region support, yeah, on the high-term time frame. Don't forget that it actually broke below it, but then after that it came back up again. What is this called? Anybody? I mentioned it a couple of minutes ago. Yes, Sunil. Corrective pattern. Yes. Yes, Crystal, is false breakout. Okay. Sunil, you're correct in terms of the corrective pattern in a bigger scale or scheme of things. Yes, on the daily chart, the corrective pattern. But now I'm zooming in on, yes, you identify as corrective pattern, but now we are trying to find where to enter long to follow the trend to the upside. So Sunil, you're partly correct. Crystal, spot on. This is called a false breakout, which is the focus of today's webinar. Okay, so you know that we are in a corrective pattern on the daily chart in the uptrend, number one. So I repeat, yeah. Number one, you already know that on the high-term time frame, you're in uptrend and you're in a corrective pattern, which Sunil correctly identified. Okay, sorry, mind my handwriting. You know that you want to go long and you're looking for key support, which is where we are. That's why I drew this whole circle here. The question is, when will the lower term time frame, like the 1 hour, start to move up for it to confirm the daily trend? Okay, this was the first sign. You might get stopped out. Okay, no big deal. But then again, this was the second sign, whereby it actually broke down this key support level and came back up. And this is what I call a false breakout. And if you plan your trade properly, if you have the right trading psychology, even though it broke downwards like that, and even though you lost money here, okay, you need to be firm and confident enough in your trading strategy, in your trading psychology, for you to be able to identify this false breakout. And there were actually two entries here when it came back to see the resistance. So I first this line here, right? This line here. So at first this line here was support. It became resistance. But then when it broke back above, it became support again. Okay, these two were perfect entries, and then boom. In fact, this was another entry possible. Of course, on hindsight, easier said than done, but just saying that you need to be able to identify. Okay, I'm spending a bit more time on Hang Seng because this is this live market shows exactly what I'm trying to talk about in terms of the false breakout setup. Yep. Any questions? Yeah, Slim, false breakout. Sorry, I didn't see your answer there. Okay, so let me just take away the line here. Go back to my okay, so this is the one. Now where we are right now, Hang Seng, is okay, definitely not keen to go long anymore, even though it's super bullish. Let me zoom out the daily chart. Okay. It's a bit of resistance around here, not the stronger resistance around 25,000, yeah. But there's a bit of resistance around the 24,650 or so. Okay, but still definitely looking nice and bullish. Okay, I'll be a bit concerned. I'll be a bit pay attention on the bearish divergence though, because there's a lower high here, higher high here. Okay, but because it's on daily chart, unless you're trading swing type of trades, then it's going to take some time before you start rolling over. But just take note of the bearish divergence. If you look at the 4-hour chart, same story. Okay, you can see a higher high here, but a lower high here. So bearish divergence on daily and 4-hour chart. Okay, but again, I said many times, divergence is just a heads up. Okay, it's not for you to trade on because the trend is still very bullish. Now looking at the 1-hour chart. Okay, 1-hour chart, you can see that yes, still bullish. So all charts are still bullish. Okay, so I wouldn't recommend going counter trend and being a hero, going against the market, even though there are divergence the higher time frame. But you can see that the 1-hour chart here is a bit more topish. It's a bit more topish already. Okay, you can see the first top, double top, and my triple top. If you want to look for short-term trade to the upside, okay, you might be able to find it. Let's see, 15 minutes. I don't see any setup even for intraday wise because the market has moved already. Okay, this is a support trend line. You might have taken some longs of the support trend line here earlier today, but right now, nah, nothing much. Okay, I'm not surprised if it goes back to top of around 224,670 or so to form a triple top. Okay, just right now, there's not much levels to look out for. A bit too late to do anything. Most of the trends are on the upside, so I would much rather go long. However, we're just in the middle of nowhere right now. Okay, so just be patient. Okay, but pay attention at this resistance level around the 24,670 or so. Okay, we might start consolidating further. Yep, that's the Hang Seng for you. What else? Any other index you want me to cover before I go on to FX? Yeah, if any other indices you want me to cover, shout out. If not, I'll move on to the FX side of things. Okay, so let me take a 10-second pause before I start on FX.